Gas calls tariffs a tax on businesses and consumers, arguing they will lead to price increases across countless products. Neil Bradley, U.S. Chamber of Commerce Executive Vice President and Chief Policy Officer, joins us now. Why won't it just encourage more, as Courtney mentioned, domestic buying of, I don't know, avocados that were grown in California or in Hawaii instead of Mexico?
Sure, Sarah. Well, first, thanks for having us on. The problem is that we can't meet America's supply for avocados for what we can produce in the United States. Like a lot of people watching your show this morning, I like a cup of coffee. We do not produce enough coffee, really hardly any coffee in the United States, to meet America's demand. So when you impose tariffs, like what we expect later today, on those type of products, that's a tax, and someone has to pay that tax. And what we hear from our members, and at the Chamber we represent small businesses, medium-sized businesses, large ones, across all industries, across the entire United States, is that this will result in higher prices for American consumers, and that means a slower economy.
Or companies that are in very good shape, after coming off of a very good period for the economy, can eat it. They have record profit margins. How much do you expect to be absorbed by the companies so they don't have to pass it on to consumers?
Well, so some of it will be absorbed by companies, some of it will be absorbed by consumers, but let's talk about it being absorbed by companies. That means lower returns for those companies, which means less money in your and my and everyone listening to today's 401k and retirement accounts. And so, we can talk about the allocation of it, but at the end of the day, a tariff is a tax. And we all know that when the government imposes a tax, someone has to pay that. And you've heard some of the advisors in the administration talking about $6 trillion in revenue. That would be record-breaking levels of new revenue. And of course, someone has to pay that. And if we don't want to pay it, our only options are to stop buying coffee, to not buy new cars, to not buy avocados, to not shop in that grocery store that Courtney was just at. And what that means is that we have a lower quality of life. And so there's just no two ways around this. This is an increase in prices that will ultimately hurt the economy.
Yeah, don't take away our coffee. So, Neil, you guys are the biggest business lobby group. What's your engagement like with the White House on this topic at this point? Are they listening to you?
Well, listen, we have great engagement with the administration and with the Hill. There are so many areas where we agree on pro-growth policy, extending the 2017 tax reforms, deregulation, pro-growth energy policy, and we're making tremendous progress on those issues. We do happen to disagree on this issue, and it is a point in which their viewpoint and ours differ. And what we're hoping is that we can get policymakers focused on all those other areas of agreement that will grow the economy, that will lower prices. And let's set aside this issue that economists across the spectrum, conservative, liberal, everyone in between, agrees will only serve to raise prices and hurt the economy.
Hey, Neil, meantime, the whole point of this is to drive domestic investment. We've gotten a bunch of Fed regional surveys. CapEx intentions are at a 6-month low. Do you think that's going to turn?
Unfortunately, no, because if you're investing in CapEx, you need certainty around the investment environment. When we're talking about investments coming in from abroad, and we definitely want to attract more foreign investment into the United States so that we can help build more things here. Well, of course, that's the other side of the coin of trading with countries. And so, unfortunately, this isn't a situation in which you can impose tariffs and then expect major capital X investments. We actually will get cap X investments if we actually lower taxes, if we reform the energy sector and we deregulate. And so that's the path to more capital investment in the United States.
Well, or if they're negotiable by industry, by company, by country, if there's a promise to build more in the United States to get some tariff relief. And that could work, couldn't it?
Well, it's often difficult in that way to kind of pick winners and losers in that regard. And as a general matter, our economy doesn't do well when kind of the government is picking winners and losers. But there is a path here towards that goal. and that is actually negotiating lower tariffs and new trade agreements. When we have done that, like with countries like Canada and Mexico, the chart that you just showed that we increased the number of fruits and vegetables coming into the United States. We stocked our grocery stores. It lowered prices for consumers and gave them more choices and made for a stronger economy. So there is a path here, but that path isn't on tariffs. That path is negotiating new free trade agreements.
And that is not what this president likes, not the free trade agreements, likes the tariff route better. Neil, thank you very much for joining us. Neil Bradley from the U.S. Chamber of Commerce.